All right, once again, back is Noel Booker with Business Credit Builder. Thanks everybody for coming. My name is Noel A. Booker Sr. I'm the CEO at Business Credit Builder. Today is a short, brief webinar about accounting and taxes for businesses. I decided to do this one impromptu because one is tax season, and it's just basic information that a business should know. This is basic information that a business should know about their accounting and taxes. Okay, so let's go over this real quick. Okay, and everybody can hear me, right? So if you can hear me, put your name in, put your business name in the chat, right? But that way we know what kind of business you got going on, right? So my company is Business Credit Builder, and what we do at Business Credit Builder is we help businesses build their business credit and access funding, right? Also have a company called MediaNet USA. The website is MediaNetUSA.us, and we do accounting and bookkeeping for small businesses. We also do website hosting for small businesses, all right? So we're going to be talking more about accounting stuff that relates to your business and just planning, just knowing. This is just basic stuff a business owner should know, because a business owner has many different hats. A business owner has to get the revenue. A business owner has to do accounting. A business owner has to do HR. A business owner has to do all these different things, have many different hats. And one of the hats a business owner should have is the accounting hat, the tax hat, right? All business owners, and the bottom line of a business is to make money, right? So this is the most important piece. This is the most important hat a business owner wears. But we're just gonna go over some basic stuff, right? I just thought it very important that business owners know this basic stuff. You know, if you know it already, that's good. But if you don't, it's just good stuff to know, right? And planning and stuff. Okay, so let's go. Let's start, right? Basic accounting and taxes. So when you set up your business, the first thing a business does is it registers their business name with the Secretary of State. When you register your business with the Secretary of State, they ask you to select an entity. There are 4 entity options. There's the LLC, which is a limited liability corporation, a corporation, a partnership, or a proprietorship. Proprietorship is when you own your business outright. Nobody's with you. A partnership is you have partners and there's more than one owner. A LLC is more a corporation. And then you have a corporation, right? An LLC is like a limited liability corporation. Then you have a corporation, right? Now, the basic differences here is for a proprietorship and a partnership, anything that business does, the owner is liable for, right? With a corporation, the corporation is liable, right? So that's how you separate your personal liability from your business liability. As in my previous webinars, I always tell people, you have to select a limited liability corporation or a corporation as your entity in order so that that business takes on the liability and not you personally. I hope that made sense. Okay. Okay. Monique is just setting up her business, right? Okay, cool. That's good. That's good. So this is good information for you to know from the beginning, right? Because a lot of people do this, just started doing their business and don't do the research that they need to know how to set up their business right. And I tell people in my other webinars that setting up your business is the most important piece to building the fundability of your business. In order for you to get money to fund your business, you have to set it up correctly. And that is the most important piece to accessing money. Oh, you was in the webinar on the 25th. All right, that's what's up. That's what's up. Okay, so this is basic. I don't normally do this type of webinars. You see, I don't have the screen set up or nothing like that. This is just something I'm doing off the top of my head because I just think that this is something that new business owners should know about, you know. Okay, so um where am I? The entities, right? Okay, so with an LLC and a corporation, that's why I suggest people set up their businesses as so that their business takes on the liability of anything happens, not the individual, right? Now, there are tax implications with selecting your entity as well. Okay, the tax implications is this: with an LLC, and you make money with an LLC, that money is taxed when you fill out your personal taxes, your individual taxes on your 1040 form. So this is what happens. On your 1040 form, it has a place to put your wages, right? You know, you got your W-2 form, you put your wages on there, right? And then there's another part where you put your business income. And it comes from a different form. The form is called the Schedule C. The Schedule C is like a profit and loss statement. It covers your revenues, your expenses for your business, and your net profit and or loss. And you put that on your 1040. And then that, let's say you have a profit, that money goes into your wages and it comes down to your total gross income. And then off your total gross income, that's what is taxed, right? So then they do the calculation of how much money you made and then how much tax you owe, right? And with a LLC, you're taxed again. There's also a self-employment tax, which is about the same amount as the normal income tax for your individual, okay? So the self-employment tax is done on its form SSE, SSE on that form. And so that's one thing a lot of people don't understand is that with an LLC, a limited liability corporation, you're taxed 2 times. Okay? A lot of people say, hey, somebody told me I need to set up an LLC, but did they tell you that you're going to get taxed on that income 2 times? Okay? Compared to if you select as your entity a corporation compared to the LLC. You select a corporation as your entity and you're only taxed 1 time. The tax implication is that this money from your corporation is not put on your individual taxes. It is separate, right? It's on the form 1120. Okay, so this is a separate tax. You don't file this with your personal taxes. This is separate, right? And it's associated with your EIN number. So when you have an EIN number for your business, you file your, and you're a corporation, you file your income that you made on your form 1120. And on your form 1120, that's where they calculate your tax. They do the same thing. They show how much money you came in, how much expenses you had, and then your net profit. And you are taxed on that net profit. About 21%, I believe the rate is. So with a LLC, you have the income tax and you have the self-employment tax. But if you're a corporation, you're taxed 1 time. And it's totally separate from you. See, that LLC money is filed with your personal income taxes, and that is associated to you a little bit there. But it is separate because it's a business, right? So the income is separated, but that money is with your personal income tax compared to, once again, your corporation, which is filed separately. You don't file that 1120 with your personal income tax. This is separate. right? There's two different entities, your personal and your business, two separate files. But if you're an LLC, you put both of those all on your personal, right? So you got your wages and you got your income that you made from your business. But
Can I ask you a question?
yeah. Go ahead. Who's that? Monique, go ahead.
Yes, I am a contract nurse,
Okay,
independent contractor, and I get a 1099.
that's
So
right.
I guess that's where the discrepancy is coming in right now with my taxes
I
because
got you.
nobody ever told me the difference
Okay,
in
right.
the income.
You're right. That's just what I was getting ready to get to now, is that you might have income that comes, you might be an independent contractor. That means you're basically an LLC, but you don't legally have to be an LLC. Oh, wow. Looks like my time is getting ready to run out. Okay, um, so on your LLC, you're gonna when you get that 1099, you're gonna file that 1099 on your 1040 form for your personal taxes. But it's gonna go on your Schedule C as a business. It's a separate business. So on your 1040, you're gonna have your wages, right? Then you're gonna have your business income that comes from the Schedule C. And on your Schedule C, it has your 1099. That's the money I made. But then there's places to put the expenses that I incurred in order to make this money. And then you have, so on your Schedule C, it's going to show your revenue and then your expenses. You take your expenses away from your income, and then you have your net profit or loss. And then that net profit or loss is what is carried over to your 1040, and that is what is taxed. Okay? So you don't necessarily have to be taxed on that whole 1099 if there are expenses that you had to incur to make that money from the 1099, that decreases your taxable income. But the point
Nobody
of,
ever told me that, and I've been a contract nurse for almost 10 years.
right, you see, that's why I did this webinar, because this is not something that everybody is told. And information is not shared out here in business. People keep the information to themselves. I don't mind sharing the information that you particularly need to know. And that's what I think that a lot of people don't know when they get an LLC. Most people might tell you even to go get, you need to have an LLC. In that case, but so that's what you need to know. And that income is taxed twice. So on your 1040 form, that money comes from the Schedule C. It goes onto your 1040, and then is included in your total gross income. And that is what is taxed, right? Your total adjusted gross income is what is taxed, right? And then on the second page of your 1040 is a place to put in your self-employment tax, which is about the same as the income tax. So you're getting taxed 2 times. If you're a 1099 or you are a LLC, that goes on your personal taxes, and you are taxed 2 times for your income. Your taxable income is taxed twice, in comparison to a corporation, which files their information, the money that they made to be taxed. They file that on the Form 1120. And on their Form 1120, it shows your income that you got in, it shows your expenses, and then your net profit or loss. And that amount is taxed 1 time. And I think the corporation tax is about 21%. So that's something a lot of people don't know, is that a lot of people say, oh, you need to get an LLC, but did they tell you that you're going to get taxed twice compared to if you set up a corporation? A corporation, all right? Now, an LLC and a corporation has a unique EIN number, but still the fact remains that that income from an LLC goes to your personal income taxes, and you're taxed twice. If you have a corporation, you have an EIN number, and that information is filed on the 1120 form and is taxed one time. Okay, a lot of people don't know that.
So one more question for you.
Go ahead.
I am getting ready to start a freight brokering company. So with that being said, in my better interest, it's better for me to do a corporation versus an LLC.
That's right.
Okay.
I'm just saying. I mean, I'm not a CPA. But I am an accountant, and this is basic information, very basic. So in your instance, I would say get a CPA to tell you which entity to use, but just this is basic information that tells you clear what to do, right? I don't want to go over my boundaries of being able to consult you, right? But this is basic. This is simple stuff.
Right. I got it.
If you're an
Thank
LLC,
you.
you're getting taxed twice. If you're a corporation, you are getting taxed once, and it's totally separate from your personal information.
Right.
Which means you got to do a little bit more paperwork every year. You got to pay. You got to file your personal taxes, and now you got to file your business taxes on the 1120. Okay. Okay. I only got a couple more minutes. Okay, so the EIN number. You need an EIN number. That is crucial, right? Your EIN number also has your address attached to it. And then when you have your EIN number and you have your corporation set up, you go get a business account, bank account. Okay. Your bank account is going to keep your business revenue and expenses separate from your personal. And also from your bank account, now we go into bank statements, right? On your bank statement, every year it has a beginning bank account balance and an ending bank account balance throughout you all already know about that. Throughout the month, you have money that comes in, you have expenses that go out. You come down with an ending bank account balance. Okay. Also, something to know is that normal businesses have financial statements every month, quarterly, or yearly. Okay. So in the corporations, most businesses do it monthly. Every month, they do their financial statements. The two financial statements that are most important to know about is the profit and loss and your balance sheet. Your profit and loss shows your revenue that comes in, your expenses, and your profit every month. And your balance sheet shows your assets, your liabilities, and your equity in the business, where your assets equal your liabilities plus your equity. And that has to balance every month, right? So from your income statement, you have your profit number, right? Your profit number goes over to your balance sheet and it goes into the equity as I increased my equity into the business with this profit. Okay, I'm just doing simple, stuff, right? So also on your balance sheet, I talked about your profit and loss. Revenues less expenses equals your profit. On your balance sheet, it's your assets equals your liabilities plus your equity. So your bank account is an asset. So the first line on your balance sheet is your ending bank account balance. That's an asset. Then it has your the other assets. You have equipment, furniture, whatever. Then you have depreciation that affects your balance sheet every month. Then you have your liabilities. If you got a loan, if you pay off a loan, that's not an expense. That's a reduction of your liability of that loan, right? So your loan has a balance. You got $100,000 loan. Then now I made me a $50,000 or $10,000 payment. That $10,000 doesn't go on your expenses. It reduces your liability. So on your balance sheet, that is lower. Now your liability is lower because you made a payment, right? And that's the basic stuff, right? I just ran through that. I think I'm gonna do this one again and have like a chart, screenshots and all that stuff. But I just wanted to do this one real quick. Anybody got any questions? Any questions before we get out of here?
I have a whole lot of questions, but I got your number from the last seminar, so I'll be giving you a call.
All right, bet. All right, yeah. This is just a brief joint that, just to give you something to think about, right? Jermaine, you got any questions? Okay, that's a bet. All right. So, I do these regularly. I don't do accounting ones regularly. So look out for when I do the accounting ones. I don't do the accounting ones much. What's next on the calendar?
I think you got one in April, the seminar that you did on the 25th.
Okay. In April. Oh, yeah. That's